Welcome back, guys, into another daily recap. Today is the 1st of November, and we're going to do our usual recap on gold, Bitcoin, Eurodollar, and GJ. And of course, we're going to look also at the dollar index. Let's start with gold. This is the daily candle we saw yesterday. Anyway, after the tapering talk, the candle closed overall bearish due to the fact that we got the huge sell-off from 1785 in the morning. Today, immediately reversing and engulfing, possibly engulfing, depending on the last hour, possibly engulfing the candle and in continuation up, giving a signal of still price being bullish, possibly to revisit those previous highs, possibly to revisit the high time frame bearish structure, to then continue down with further dollar strength. This all overall bullish move on gold is against the correlation with the dollar, because as you can see here, the dollar is very strong as well, and that's why, as you can see, it's very strong. We are almost at these previous highs, and it's uncorrelated. It's unrelated. Today we got tonight we got the bounce, and just straight dollar strength. But let's jump into the 1 hour time frame for our my morning analysis. As I already explained during the scalp analysis, we were looking at 1772 as a price point of interest, and as I explained, we got the high risk reward buys, safer buys above 1785, in continuation up even above 1781. As you can see, price just went straight up more than 200 pips and has now been rejected this big supply area. As you can see, was charted up for multiple rejections at any price level inside, and for now we got the rejection. We'll see if the daily candle closes strong bullish or leaves like a wick, so that tomorrow we might have a bounce in continuation up, or we see multiple rejections in continuation down. On the 1 minute chart, as you can see here, as exactly I was explaining you, we saw in the morning, some bounce from 1772 key level. We broke above this order block, and 1775 was the PSA for this buys. This was high risk, high reward buys. Okay, high risk, high reward buys was over here. We got the medium risk buys and also safer and the safest buys as possible. We also got, as you can see, this is a very clear bullish trend. Price making higher highs, higher lows, a little bit of consolidation, higher highs, higher lows, break and retest of these previous highs on the left hand side, and then just higher high, higher lows. 1781, multiple retests. We also got some here. We actually got some news report for the US dollar, which came out quite good for the dollar, but gold was just on its way up. So no mercy, as you can see, break and retest of 1786 PSA, break and retest of 1789, and just going above 1797, where it finds some reaction, some price sensitivity area, and then just has a small correction, and then stays inside this area above 1789, below 1795. Let me just check here. Yeah, look at this nice candle setup with a break, a retest, another retest on the dot, lower wick, and then continuation up. Very, very nice ranges to play. easy game with the gold strength coming from yesterday as well, as you can see. Safer buy, risk reward buys, safer buys with the candle setup one, and I think there was another one around here. One, two. No, I lost it. Okay, no. This candle setup, the one that I trade. This candle setup at the breaker retest of those previous highs, and as well here messy price action due to New York opening, but still always closing above the key level, and also retesting, if you can see, retesting those previous highs and then going up. Break and retest of the PSA, break and retest of the PSA, of the key level, and then just going even up above 1795 again. So this was gold. As you can see, we never went below 1772. So all this price action was useless. We never got rejection at 1786. Strong rejection to say, as you can see, price already melted, break and retested. So no sign, no clear sign of exhaustion, not even a double top. If you didn't see this, not even a double top, just price going up bullish. On Bitcoin as well, let's see what happened today. As you can see, we never broke above 62,500. So all this bullish action was invalid. All this analysis, was very optimistic. What we saw was the playing out of the bearish trend with safest high risk reward sells below 62,750, which we got also with this retest after New York, and we are going to see it now, and safer below 61,700, which happened to be safer only later on, not only here. The price action here was very messy, as you can see. Okay, as you can see the price here, so gold deleted, we saw multiple taps above 62,500, but still failing to make and to break the previous highs. Break and retest on the dot of 62,500, giving you the possibility for sells and continuation sells for like 50 or 100 pips if you got them here on the high risk high reward sell area here. As you can see, safer here were only live trades for like 28 pips, so not good enough, but still playing out for a few pips. After that, what we saw is a price getting into a range and consolidation period, failing again to break above and making its way down. So these were high risk high reward, sort of a dynamic analysis. Here seeing a double top at the PPL, failing, still maintaining the bearish price action, as you can see. But after that, there was not enough momentum to break below those previous lows. Exactly, you visit exactly those lows. Again, some reaction at the same level. Goes to revisit and grab liquidity exactly at 62,500. So in insight, of course, it's easy. This would have been the easiest entry, but as you can see, your main bias of sells below here was always valid, as the supply zone price never broke above. You got some high risk, high reward sells, a cleaner, much faster clean breakout below 61,700, this time for 100 pips. A 100 pip move. Okay, and after that, nothing to say, just another block being created between these levels, between the lows and these previous highs, as you can see. Look here, between those previous highs and these lows, exactly on the dot. So I'm going now to check this entry, if there was a possible entry, maybe below this level, because we're the high risk reward, safer only for 28 pips. This in insight is the perfect entry, but let's see now below 61,750. Yeah, we have our candle setup. Breaks below, the next one makes a top wick and then closes bearish with all these bearish price action, break and retest, break and retest. This could have been a nice entry in sells, as you can see, as per pre-planned analysis, just playing out very late. Enter here, enter here, 15 pips is well above the level, and you have like 80 pips of profit in a few minutes. Let's go in euro dollar as well. From the morning, the only thing that played out was not any of these premium high risk, premium rejection areas, but what played out was below 155.70, and then you extend whenever you want. But as you can see, price exactly broke below and then just went like 30 pips below the level. So this was the only sell and analysis playing out on euro dollar. As you can see, we have the first occasion trade setup here in the morning, and then later on during New York, after the new 4-hour candle, pumped another setup even below this order block, extending below 1.15500 to go and target. So to go and have the maximum, which is 30 pips, or safer 20 pips as well. If you enter here, you have your 20 pips from the morning. It's just that price action was not the cleanest overall, and this one is the data labor report, not 130, so it was around here, which gave a weak dollar, which is weird. Yeah, dollar went down, reacted, and then went back up. Euro dollar went up exactly at the PSA and then melted down. Weird, but funny coincidence. Funny coincidence that exactly here the dollar reacts at when euro is exactly at this price point, dollar is exactly at this price point to continue up. But this is it for euro dollar. Nothing much more to say. We are at the previous lows, and as you can see, we got the reaction at these previous lows with a huge rejection, as you can see here. Last but not least, GJ. Today we had a big report, big news. We had the interest rate hikes talks and decision. in England, which, as you can see, was kept exactly the same interest rate decision, same monetary policy and stimulus provided to the economy. So if you look back on last week, as you can see, we had a very bullish GJ due to the huge, especially here, to the interest rate talks. But as you can see, today the talk was not worked, and we had this strength in the yen, and we have some weakness in the pound. But today it was the day where it melted due to the decision of keeping the same rates, not raising them. So we never got any buy setup, not with any fundamental reason. We only got the sells from 156, safer below 155.8 and 155.5. After that, from here, it just went 250 pips. So as you can see, the chart is not the prettiest due to the fact that it's very large. But as you can see, we can start from during London session. We have London open, not failing to break 155.56, and then we have our trade setup exactly happening at 155.8 PSA for sells, which, as you can see, just played out nicely. Not a single time that you had, okay, maybe it's going bullish again. Nope, just printing and printing and printing lower highs, lower lows. This is already for 70 pips. Here. If you were extending below 155.5, again, you enter anytime. In Insight, you are still active. You still have your 45 pips as the first trade. But even if you're intraday, you are not a scalper. You still have some runners maybe below here. You have the stop loss above this is when the interest rate decision came out. You don't want to get out of break even. You have the stop loss either above the PSA or above the PPL, and it is still active when the price just goes bananas and goes below reacts at 153.200. So 75 pips for scalp, 250 for an intraday trader, or 230 for an intraday trader with the two different entry areas that were outlined. So of course, this is Insight, but as well, if you entered at these PSAs in the morning as an intraday trader, you are well aware that you have your stop loss here above the previous PPL in profits whenever you enter here or here, sorry. Here is at break even. You already took your partials at 35 or 75 pips, and you let the rest run risk free. If the interest rate decision is positive, you get stopped out here. Otherwise, I mean, it's a win-win situation for you. So that's it. Bank of England keeping the same rates, keeping the same stimulus. Here the jobless claim came out better, but didn't have much of an impact on gold, on the dollar index. The dollar index just kept bullish, going bullish, which is due to the fact that, as I said, the tapering has come. Boom. This is yesterday went bearish, but this is the correction because USD will be Anyway, so you can say that it was priced in, it was not priced in. I agree with that, but still, you cannot deny that the US dollar, with the tapering going on, it will get more value. As you can see today, we had a flexion in the stock market, but still bouncing, still respecting this always bullish trend line. Can't really be extended from here, but from here, when buyers jump back in here, buying the dip, then this was October, then it was just a bullish run, making all-time highs. This is it, guys, for today. See you tomorrow.